this high and this high. That's what I was looking at. If you looked at this high and this high, that's not meeting the criteria that makes what? A high probability relative equal high. Because this high is slightly higher than that one. But this high is obvious and you can see it. So I like this one. It's just above here and here. And that's the one I gave in Tanja Trade's live stream today. So this candlestick here is 930. This run up, and then as soon as this candlestick here closes, you cannot qualify that as a fair value gap to use. And this blue shaded box, we're going to take that off because it's the opening range gap, and I'll show you how it's formed again here so that we have a complete rundown of what it looks like again. But this is not a fair value gap because the imbalance candle, or out of a 3 series candle pattern of fair value gap, the middle one is the inefficiency and the imbalance. So here, if you look at that 930 candle, that candle doesn't exist in regular trading hours. When you toggle that, you're not going to see the difference between 414 and where we open up at 930. That's 2 candles. You need a third one. And that's this one here. It's always going to be 931. So 931, that's the earliest, that's the soonest, I had it right the first time. The earliest formation of a fair value gap between 9:30 and 10 o'clock can only form, based on the rules I'm giving you, as early as 9:31. So you have to get that first minute past you, and then you can create a fair value gap on the 931 candle if the 932 candle affords you the structure or the presentation of a fair value gap. And we don't have that here. The first formation of it is here at 935. This candle here is not a fair value gap. So you cancel that one out. Start looking for the fair value gap at 931 to form. Is there a fair value gap here? No. Is there one here? No. 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 This one isn't one because this candlestick overlaps with the previous candle's low. So there's no gap there. This one we break down, and the next candle we open and have a run up to this high here. I'll take this away so you can see it. See the fair value gap now? It's obvious, right? It's clear. It's easy to see. Real easy to see that. Nothing in here is a fair value gap until here. So your fair value gap for Wednesday, August 28, 2024, forms on the 935 1-minute candle. There you go. So now we break down below the candle I tell you before this run up in Tanja Trade's live stream. I tell you, look at the 815 candlestick. That's an inversion fair value gap. So here it looks like it should come down and be treated as what? Bullish fair value gap. That's what you're thinking, right? If you think you understand what I'm doing and without understanding the logic, you think that that's what this is. It's go long. But I called that initially, first comment in her stream mentioning any fair value gap was that candle at 815 is an inversion fair value gap. And then I told you that this is the minor buy side liquidity at that price level right there. So it was based on this high and that high being relatively equal highs. So the buy stops up here is a minor buy side liquidity pool. The market breaks lower into the inversion fair value gap. Are we trying to buy it? If it's an inversion fair value gap formed like this, no, we're waiting. Okay, we're waiting. We want to see it trade down. And what does that give us then? It gives us the potential to see if it goes below it, and then does it allow for this same fair value gap to stave off any higher prices. But if the market trades just outside of your PD array, which is this one here, which was called an inversion fair value gap before in front of the live audience over there. So she has a timestamp feature and her chat's there. I can't edit what she has there. I can't hide anything, and everybody saw it when I did it. it rallies up, and just outside of the inversion fair value gap, this wick comes all the way back up to first presentation. That's the fair value gap here. So we went below the inversion fair value gap. We left the opening range gap, which I'll show you in a moment, but we're trading up into it here. And I said, when it gets there like that, I said, it's hitting the bottom of the opening range gap and inversion fair value gap. Look for August 16th, new day opening gap, and August 27th, maybe getting down into that on the first pay, driving down in there. You can go see in verbatim what I actually said and the timestamp that it's occurring, and then look at your chart, and then price does it. People watched it happen. They watched it happen on the Judas swing right here when I call it from there up, and then here as a sell-off using first presentation there. The bottom of the opening range gap. Now if we go into regular trading hours, go over here, toggle that. That's this big candle here. See that? Now if you're using regular trading hours, you can see how opening at 9:30 here and then closing up here and then using the previous candle at 4:14 on Tuesday. Notice the time at the bottom of the chart down here. It's 4:14 yesterday, Tuesday. And then we opened down here. So the gap is from where we settled at 4:14 and where we opened. That's the opening range gap. This is a discount gap. That means it's an open that's lower than where we settled previous day. And then it's likely to do what? Half of that range within the first 30 minutes of trading. So you annotate it here, put it on the opening price, and you draw it up to the settlement price. And you make your little rectangle here. And then because it is a premium, it's a discount gap, mine's blue, okay? Meaning that I'm trying to communicate to you, I don't have this stuff on my chart, I only have it to teach it to you. I'm looking at, from that opening price here, can it get back to that price level here? So if I'm expecting that to occur, what am I expecting in price? Buy side delivery. That means up movement in price, going higher, rallying, basically. So it needs to go to that price level here, but minimum expectation is in the first 30 minutes, 70% chance that it's going to go half of that gap's range. Here's electronic trading. Opening at 9:30. That lower level also happens to be new day opening gap from yesterday at 6 p.m. Eastern time, and the difference between 5 p.m. yesterday's closing price. It's only 2 ticks. That 2 tick here is overlapping with half of that opening range gap. See that? So we open, half the gap is hit, full closure of the gap is hit, and then it does this. Sweeps above the buy side. Here and over here. So there's 2 things happening there. You can be a buyer inside this inversion fair value gap, because at this point here, there, it's going to act as a reclaimed fair value gap. Initially, it should, if you know what you're doing, you're not going to find success here. It trades through it. Then we get to the time of day when it needs to be delivering. It's consolidating here. It's an inversion fair value gap, meaning the original classification was it should be expected to be used as like a level to send price higher. It's a discount. So it's something to buy. But when it does this run to the liquidity, if we break down below it, it's used as a catalyst to send us as a premium and then drive prices lower. Here, it's a bullish fair value gap. It's not the right time to take that trade. We're minutes before what? 9:30 open. So the market's just waiting. And then when you're in here, you're right before the opening bell, minutes before the opening bell. Just so happened to be at a few minutes before 9:29, and at the opening bell, it opens and then hits the gap. And what is it doing? It's using it as its original form over here, but only going into the buy side I outlined. I'm more inclined to use that gap as an inversion fair value gap. I want to see it do this. If it happens to go below it and then it leaves behind in its wake, dropping down, it creates that fair value gap right here that's shaded. So we have two things forming there. We have the bottom of that blue box, which is the opening range gap low, which in this case is the opening price at 9:30. And then we have the return back into this gap here on that pass. So two things are happening right there on this. We're trading into the inversion fair value gap. So you could be selling short here, midpoint, and then the drawdown is, can you take that trade if it trades up into this gap? If you can't, try to get a fill just below or the low of that first fair value gap that forms. Because the narrative is set in motion now. We have a shift in market structure. Liquidity's been taken here to here and return. That low of the opening range gap being tagged right there is doing two things. It's returning back to the opening price at 9:30, and it's going to the first fair value gap that formed between specific 9:31 and 10 o'clock. Does it, look closely, does it close the upper half of that gap? No. Isn't that what you want? Yes. So what happens if when it trades up there and you don't get into it there because it's too fast or you're just not on the game? Like you just can't bring yourself to enter the trade. When it trades back down into the inversion fair value gap, you can short there and use what this high is plus one tick. How can I trust that ICT? Because if you have what I'm outlining here and what I outlined in Tanja Trade's live stream, this is going to act as an inversion fair value gap. And if it's going to run up here with a wick, because we opened here on this candle, it opened there. And to get to that level here in one candle, if it's going to go lower, chances are this is going to form some kind of a wick, right? So if that forms a wick and you're trading in it here, you're putting your stop loss one tick above the high. What should form after that wick? Worst case scenario, another candle with a wick that's only going to go about halfway of this wick. Oh, that's why your trades are never nervous. You're not worried about it. No, I'm not, because I know what I'm looking for. I know the logic I'm looking for, but it doesn't even give us another candlestick to even try to approach outside the other end of this or the high of the inversion fair value gap. So it's really heavy because it goes up there, hits the first fair value gap that I taught you. All this stuff keeps repeating, doesn't it? This is still too early for you to fall in love with it. You might be smiling and think to yourself, wow, yeah, I can see it. I didn't see it when it was happening, but I can see it. It's really there. Wait till you have a couple months of you journaling this and you have example after example after example. Your mind is going to be formed pursuing these types of setups. They're not hiding from you. They can't be hidden from you. There's nothing to worry about if you can't see it right now. Fall in love with the meditation of capturing, collecting these things day by day. Getting screenshots like this, just like this right here. Saving it just like that. And then seeing how that first fair value gap between 9:31 and 10 o'clock is used. And we hit it, it hammers it and drops down. And then now look at look what else happens. We have this old area of new week opening gap, new day opening gap. Look how many times they've used these levels. How many times it's traversed back and forward and through. But when there's time of day that I'm teaching you to focus on, when the algorithm will refer to these levels as key important factors and arrays, they use them. New day opening gap, low, the bodies, hitting the low of it, dropping down, leaving this gap here. This gap is a breakaway gap. What makes this gap a breakaway gap? Because we've had this initial run that starts the run lower. If The market's going to trade to a first presentation fair value gap between 9:31 and 10 o'clock, and it's going to drop. Once it starts to run, you're anticipating this occurring. This is like a signature, like, yes, now we're going to be really running. You don't want to see that close in. It can come back up there and close it and then drop later on. It's just better that it doesn't. Sometimes you've seen my trade executions where I'll annotate something. Ideally, I want to see this stay unfilled, and I'll mark it as a breakaway gap. Sometimes it goes down and fills it and then still does where I want it to go. It's just better. It's just like a sugar coating, a cherry on top to what you're already doing right. Okay, the price is going to go where you think it's going to go if the trade's right. But these are things that you really want to have as hallmarks in your winning trades. They're not always going to be there. They can still close in, rebalance to that point and send it lower and still be able to hit your target. It's just, I want to see this because that means we're heavy. We can't even fill that back in. And the market's going to drop down into the targets I gave in the live stream, and Tanya Trades witness of everybody was over there. She had like 3,600 people in there. And the new day opening gap on August 27th, that was hit. And initially is August 16th, new day opening gap.